In 1947, a gardener in Sawtelle, Los Angeles, named Morio Hayashida walked out of the Poston internment camp 2 years earlier with a government bus ticket and $25. By 1951, he had helped found a club with 10 other men that met in a garage on 7th Avenue. Each man put $20 into a pot every month. One man took the whole $200. No bank, no paperwork, no interest, no credit check. By 1954, 24 of the 30 members had purchased property. The bank had refused every single one of them. This club was called the Tanomoshi. In those same years, Korean families in Queens were running a Kai. Mexican families in East Los Angeles were running a Tanda. Jewish families on the Lower East Side were running a Gemilut Chasadim fund. West Indian families in Brooklyn were running a Susu. Vietnamese refugees in Orange County were running a Ha Yui. The same system, a dozen different names, hundreds of thousands of families, all doing what the bank refused to do. Number 8 on this list funded the down payment on the first Korean-owned grocery store in Flushing. Number 14 was studied by the Federal Reserve Bank of Philadelphia. They concluded it had been operating in plain sight for decades, and nobody in mainstream finance had noticed. And number 3 ran in one Los Angeles neighborhood for 46 years without a single written contract. Hit that subscribe button. Let us count down the 25 lost rotating credit clubs that let immigrant families buy homes when banks refused them. Number 25. The name nobody wrote down. A dry cleaner in Flushing, Queens, named Jin Ho, arrived in New York in 1971 with $180 and a list of 6 names, men from the same village in South Korea who had arrived the year before. Within a week, 7 men were meeting in a church basement every 3rd Sunday. Each man put $50 into an envelope. One man took the $350. Next month, the next man. The system was called the Kai, pronounced K. It dated to 16th century Korean farming villages as the only reliable way to raise lump sum capital outside the formal economy. The Kai was not a secret. It was simply invisible to everyone who was not in one. Number 24. The garage on 7th Avenue. In 1945, 11 Japanese-American men displaced from the internment camps met in the garage of Fukunosuke Kusumi on 7th Avenue in Los Angeles. Each contributed an equal share into a monthly pot. Any member in need could bid for that month's collection. Within 5 years, 24 of 30 members had purchased property. By 1951, the group had incorporated as the L.A. Southwest Japanese Credit Union. By year's end, assets had reached $64,000 with 235 members. The garage was the bank. The bank outlasted every institution that had refused them. Number 23. The first of the month envelope. A hotel laundress in the Bronx named Inez arrived from Barbados in 1962. On the first of every month, 12 women from her church pooled $25 each into an envelope managed by a woman they called the banker. One woman received the $300. The next month, a different woman. In Jamaica, this was called a partner. In Barbados, a Susu. In Haiti, a sol. In the Dominican Republic, a san. An estimated 3/4 of Caribbean immigrants in New York participated in some version of it during the 1980s. The envelope moved around the room. The room never moved. Number 22. The Tanda at the bakery. A baker in East Los Angeles named Esperanza managed a Tanda for 22 women in her neighborhood through the 1960s. Each woman put $10 into the pot weekly. One woman took the $220 every week for 22 weeks. Over 31% of the Mexican population actively participated in a Tanda at some point in their lives. The Tanda did not require explanation. It had never required one, Esperanza kept the ledger in a shoebox under the counter. No bank vault was ever safer. Number 21. The Pushke box behind the flour tin. A garment worker on the Lower East Side named Rivka kept a small metal box behind the flour tin in her kitchen. Every Friday before Shabbat, she set aside whatever coins she had saved that week. The box fed the Gemilut Chasadim fund at her synagogue, the interest-free loan society operating in her building since 1904. By 1940, an estimated 500 such societies operated across the United States. The Hebrew Free Loan Society of New York, founded in 1892, was the oldest. All operated under the same principle. The Torah forbade charging interest on a loan to a fellow Jew. The Pushke was the smallest unit of a system older than any American bank. Number 20. The Sunday Morning Hui. A seamstress in San Francisco's Richmond district named Mei Ling joined a Hui in 1958 through her church. 15 women, $30 each per month. One woman received the $450. The bidding happened quietly before the Sunday service. The woman who needed it most urgently would offer slightly more and win the month. The Hui had operated in China for centuries. In America, it was the primary mechanism by which Chinese-American small businesses raised opening capital in the 1960s and 1970s without approaching a bank that would likely refuse them. The church basement ran a financial system older than the Federal Reserve. Here is something the Federal Reserve Bank of Philadelphia published in a formal discussion paper. Their researchers found that rotating credit associations, the Tanomoshi, the Kie, the Susu, the Tanda, the Hui, were operating at significant scale across American cities, completely invisible to the formal banking sector, not illegal, simply not visible to institutions that had never looked for them. Participants faced lower borrowing costs than bank loans. They built credit discipline through social obligation. They accumulated lump sums large enough for home down payments without a single application being filed. These systems had been operating in plain sight for decades. Nobody in mainstream finance had noticed. Number 19. The Stockwell on the factory floor. A steel press operator in Gary, Indiana named Josephine arrived from Trinidad in 1958. Her rotating club had 12 members from the same factory floor. Each woman put $15 in every Friday. Each Friday, one woman walked home with $180, a month's rent paid ahead, or a winter coat for the children. In South African townships, it was called a Stockwell. West African and Caribbean women who had never met each other arrived at the same architecture independently. The factory floor ran the system the bank had refused to build for them. Number 18. The Cundina in the labor camp. A farm worker in the Imperial Valley named Rosario organized a Cundina for 8 women in her labor camp in 1966. 8 women, $12 each every 2 weeks, rotating across 16 weeks. By the end, each woman had received $96, an extra week's wages. In the colonias of the American Southwest, the Cundina was the financial foundation on which families built stability. The name varied, Tanda in the cities and Cundina in the fields, but the arithmetic never varied. The Cundina asked only one thing, that you show up. Number 17. The Arisan in the living room. A textile factory worker in Los Angeles named Sari arrived from Indonesia in 1979. Her Arisan met on the first Saturday of every month in rotating homes. 12 women, $20 each, one winner per month by lottery, announced over tea and rice cake. The Arisan had been a cornerstone of Indonesian community life for generations. Women who would not default on a bank loan they feared would never default on an obligation to women who shared their table. The living room was the vault. The tea was the collateral. Number 16. The Moai on the plantation. A pineapple plantation worker in Oahu named Kame ran a Moai for 30 years starting in 1921. 12 families, monthly contributions, monthly rotation. The plantation paid in company scrip. The Moai converted community trust into cash. The Moai was the Okinawan variant of the Tanomoshi. When Okinawan workers traveled to Hawaii as contract laborers beginning in 1900, the Moai came with them. It ran invisible to plantation management, critical to the families who depended on it. The Moai was what the plantation did not know it was funding. Number 15, the Njangi in the church hall. A nurse's aide in Houston named Adaizi arrived from Cameroon in 1984. Her Njangi met monthly through her community association in a church hall. 20 members, $50 each. One family received $1,000 per rotation. In Cameroon, Njangi participation exceeded 90% of households in some communities in the late 1970s, generating turnovers that exceeded entire formal bank lending to those areas. The Njangi traveled to Houston, Atlanta, Washington, D.C., and New York with every wave of Cameroonian immigration. The church hall held the meeting. The meeting held the money. Number 14, the Ekub in the Ethiopian community. A restaurant owner in Washington, D.C., named Almaz organized an Ekub among 12 families from her Ethiopian community in 1987. Each family contributed $100 per month. The $1,200 monthly pot rotated by lottery. Almaz's family received their turn in month 8, used as part of the down payment on a townhouse in Prince George's County, Maryland. The Ekub was the Ethiopian form of the Rotating Credit Association. Entry barrier, trust, exit consequence, community shame, default rate, near zero. The Ekub was the bank that ran on reputation. Number 13, the Pandeiro in the apartment building. A house cleaner in Newark named Fernanda ran a Pandeiro for 10 Brazilian women in her building from 1991 to 1995. 10 women, $40 each every 2 weeks. One woman received $400 twice a month. Fernanda's version required no bank. It required 10 women who lived in the same building and knew each other's circumstances. No application, no interest, no rejection letter. The building was the branch. Trust was the only account required. Here is the number that matters. A study published in the Journal of Sociology and Social Welfare in 2020 measured what happened to African immigrant families after receiving a rotating credit payout. Home ownership increased by 13.6%. Small business ownership increased by 27.2%. Vehicle ownership increased by nearly 20%. These were families for whom the rotating credit payout was often the first lump sum they had ever held at one time. The Community Reinvestment Act was passed in 1977 because American banks had systematically refused loans to minority neighborhoods for decades. The Rotating Credit Club had been the community's answer to that refusal for 30 years before Congress acknowledged the refusal existed. Number 12, the Paluwagan in San Diego. A hospital orderly in San Diego named Renato organized a Paluwagan among 16 Filipino families in 1974. Each family put $50 into the pot every month. One family took the $800. Renato's family received their payout in month 11, enough to pay off the remaining balance on their car, debt-free for the first time since arriving. The Paluwagan organizer was always a trusted woman. No paperwork, no signatures, no one defaulted. The Paluwagan was the insurance policy the formal economy forgot to offer. Number 11, the Chit Fund in New Jersey. A textile merchant in New Jersey named Rajan organized a Chit Fund among 18 Indian families in his community association in 1982. Each family contributed $100 per month. One family received the $1,800 pot per month by bidding, willing to contribute slightly more, winning an earlier rotation. Chit funds had been regulated as formal financial institutions in India since 1982 under the Chit Funds Act. They arrived in American Indian immigrant communities as cultural memory, already understood, never requiring introduction. The Chit Fund crossed the Pacific with the memory of how money worked before the bank decided who deserved it. Number 10. The Junta in Washington, D.C. A restaurant worker in Washington, D.C., named Carmen, organized a junta for 8 Peruvian women in her building in 1985. 8 women, $30 each per week. One woman received $240 per week for 8 weeks. Carmen ran 6 continuous cycles, nearly a full year. The junta operated across Peruvian, Colombian, and Bolivian immigrant communities in American cities throughout the 1980s and 1990s. Its mechanics were identical to the Tanda, the Kai, and the Susu. The junta met weekly. The bank was never invited. Number 9. The Saul in Little Haiti. A home health aide in Miami named Marie Claire organized a Saul among 15 Haitian women in her church community in 1980. 15 women, $20 each per week. One woman received $300 each week. Marie Claire had run the same Saul continuously since arriving in 1977. The Saul provided the down payments on the small homes in Miami's Little Haiti neighborhood that became the foundation of Haitian American family wealth in the 1980s. The Saul organizer kept the ledger in her memory. Complete reliability. The Saul ran on a handshake older than any deed of trust. Number 8. The Kai that opened the grocery store. A grocer in Queens named Kyungja arrived from Korea in 1969. Within 2 years, she had joined a Kai with 11 other Korean women from her church. Each woman contributed $200 per month. Kyungja's turn came in month 7. The $2,400 payout, combined with her husband's savings, provided the down payment on a small grocery store on Northern Boulevard in Flushing, opened in 1973. Korean-owned small businesses in New York grew from almost none in 1965 to over 15,000 by the mid-1980s. The store on Northern Boulevard was the Kai made visible. Number 7. The 11 men in Fukunosuke Kusumi's garage in 1945 did not know they were building a bank. By 1950, the group had grown to 30 members. By 1951, it had incorporated as the LA Southwest Japanese Credit Union with 45 members and $64,000 in assets. The Tanomoshi traced back to Japan's Tokugawa period between 1603 and 1868. It crossed the Pacific with every wave of Japanese immigration. It survived the internment camps, not in writing, but in the memory of every person who walked out and needed to rebuild. The Tanomoshi became the credit union. The credit union became the home loan. The home loan became the generation. Number 6, the Susu that rebuilt a neighborhood. A seamstress in Crown Heights, Brooklyn, named Norma, ran a Susu for 16 women from her church starting in 1971. 16 women, $25 per week each. One woman received $400 per week, and it ran without interruption for 11 years. Contemporary analysts documented that West Indian-owned development in formerly declining areas of Brooklyn and Queens in the 1970s and 1980s was significantly funded by Susu capital. The neighborhoods that banks had written off were being rebuilt by women in church basements with $25 envelopes. The Susu did not revive the neighborhood. The neighborhood revived itself. The Susu was the mechanism. Number 5. the hui that outlasted the Exclusion Acts. A laundry owner in San Francisco's Chinatown named Wing Lok organized a hui among 12 families in 1902. $15 per family per month. One family received $180 per rotation. The hui had operated in China for centuries. In America, it served Chinese immigrants locked out of conventional banking by the Chinese Exclusion Act of 1882. It ran through the Exclusion Acts, through the Depression, through the Second World War, and into the era of the Equal Credit Opportunity Act of 1974. The hui outlasted every institution that tried to replace it. Number 4, the Tanda that crossed with the border. A farm worker in Salinas named Guadalupe organized a tanda among 10 women in her labor camp in 1968. 10 women, $10 into the pot every 2 weeks. The $100 rotating through 10 women over 20 weeks. In Mexican and Mexican-American communities, the tanda organizer was always a trusted woman known for her reliability. The Tanda had operated in the American Southwest since before the border moved through these communities in 1848. The Tanda did not cross the border. In many places, the border crossed the Tanda. Number 3, the Gemilut Chasadim that ran for a century. In 1892, Jewish immigrants on the Lower East Side organized the Hebrew Gemilut Chasadim Association, the Hebrew Free Loan Society of New York. Loans were interest-free by religious law. By 1940, an estimated 500 such societies operated across the United States. In Dallas, 14 Jewish business leaders founded a fund in 1935 with $132 and agreed to make loans up to $10 to any Jew in need. That fund still operates today. The free loan was not charity. It was the Torah's highest form of tzedakah, strengthening a hand before it fell, not after. The free loan was not generosity. It was obligation. Number 2, the hui that built Little Saigon. A restaurant worker in Westminster, California, named Than, arrived in 1978 with 47. The U.S. government gave his family $300 in resettlement support. By 1980, he had joined a hui with 11 other Vietnamese families from his church. Each family contributed $50 per month. Than's family received their payout in month 9. $600 combined with 2 years of savings, used to lease a nail salon on Bolsa Avenue in Westminster. Within a generation, Vietnamese refugees had among the highest home ownership and business formation rates of any immigrant group. The hui was the mechanism. Little Saigon was not built by a bank. It was built by families who pooled $50 a month. Number 1, the system that had no name in English. Every community in this video called it something different. The Tanomoshi, the Kie, the Susu, the Tanda, the Hui, the Paluwagan, the Ekub, the Arisan, the Soul, the Junta, the Njangi, the Moai, the Pushke, the Pandeiro, the Chit. Academics called them all rotating savings and credit associations, a term that made them sound technical and obscure when in reality they were the most human financial invention in history. A group of people who trusted each other, agreeing that if they all saved together, each of them would eventually hold enough to act. Morio Hayashida, the gardener from Sawtelle, who helped found the Tanomoshi in Fukunosuke Kusumi's garage in 1945, contributed his $20 every month from 1946 through 1950. By 1951, that club had become the Japanese American Community Credit Union. 24 of 30 original members owned property. The bank had refused every single one of them. The system they built in a garage outlasted the refusal. It is still operating today. That is what a rotating credit club is, not a financial instrument. A community that decided its trust was worth more than the bank's permission. Every club in this video ran on the same principle. People who knew each other. Money pooled together. A rotation that made sure everyone eventually received what everyone had contributed. No bank required, no credit score required, no permission required. If your family ran any version of this system, whatever they called it, drop it in the comments. Tell us the name. Tell us how it worked. Not one of them needed the bank's approval to begin.